David Berson. Nationwide is out with its Health of the Housing Market report. And it seems though you've determined that next year is going to be a good one for housing. So that's good news, right?
Well, it is going to be a good year for housing, and that is good news for the economy. Housing has been a sector, while improving, it's been holding the economy back. It's certainly not as strong as it used to be. And in some ways, that's good. You don't want another housing bubble. But we think the fundamentals are pretty good for housing for 2016.
Well, how much higher can prices go before they get too high and then we come down?
Well, in most parts of the country, house prices are still below where they were during the boom. And plus, incomes are higher than they were then. But there are parts of the country, certainly California, certainly New York, D.C., and other markets such as Dallas and Denver, where house prices have moved up very high, and we have some concerns about those markets.
How scared should people be in the oil regions? Houston, North Dakota, the ones that you just mentioned saw huge run-ups because of the shale and the production. Now, clearly, that's going down.
We have concerns about some of those areas as well. We've already seen some fairly significant declines in employment in those areas. They're healthy in other regard with the housing market. But if job growth continues to moderate in those areas, I think we'd have some problems with housing in those markets.
All right, what about the millennials? For a while, we kept hearing that they're renting, didn't want to buy because they want to wait before forming households. Are the millennials, are they forming households and buying houses now?
Well, the older millennials are. When you're age 30, it's not as cool to live in your parents' basement anymore, particularly when your significant other says, I don't want to live with your parents anymore. So the older ones are starting to form households, and we've seen a pretty big pickup in household formations over the last year, and every household has to live somewhere. They may rent, they may buy, but they fill up space.
All right, and the big question for this week is, will higher rates undo the housing market? Because clearly the Fed is thinking about it. Some people say it's a shoo-in for them to raise rates. What does that mean for housing in 2016?
Well, eventually, higher rates will undo the housing market, but we're a long way from that. The Fed is widely expected, and we agree, to raise the federal funds rate by 25 basis points, quarter of a percentage point. And long-term rates, such as mortgage rates, won't even go up that much. If you look historically, periods of times in which the Fed has been tightening, rates have been going up, usually the housing market is strong because the job market is good, household formations are strong, and that's what's happening now. So I think we need to see, or we would need to see, a fairly significant increase in interest rates for the housing market to be negatively affected, and that's not going to happen next year.
All right, and then one more question. If the dollar continues to be strong because of our higher rates and European and Chinese weakening, will that hurt foreign buyers from coming in and propping up markets in New York, in Miami, and San Francisco?
Well, the stronger dollar certainly makes real estate more expensive here. To a large extent, we've not seen that impact yet. Where there has been a slowdown in buying, I don't think it's because of the dollar. I think it's because of slowdowns in foreign economies. So 2016, though, could well be a year in which we see foreign growth in Europe, and I think also in China pick up, and that I think will help the housing market.
All right, thanks a lot, David.
Great to see you, Greg.
Thank you for watching The Street.